Good evening. Ira Epstein with your Metal Market Wrap-Up, and this wrap-up is for Tuesday, and we're at the 14th of March, 2023. And what a day. You know, today was the day where you could sit back and you're going, at least it's not another crazy day. Are you aware that the Chicago Mercantile Exchange set record volume yesterday traded? I didn't realize that. I think it was yesterday or Friday, but I wrote about it. It was one of those days. Monster volume. What do you do with something like that? There you go. And it's interesting because I don't think it's over. You know, markets have these events where you go, they stall out, it gets quiet, and then the other shoe drops. I'm just waiting. Could there be another bank? I don't know. That would do it. What about today's CPI number? Well, the CPI number, from my perspective, keeps the Fed on par to do another 25 basis point hike. 50 won't happen. The market maybe can't handle that. But the message of not doing it is worse than passing on it. Why? It says something's wrong in the system because the inflation is running too hot and it's not falling fast enough. It is falling, but it's not falling fast enough. And when you go into the core year over year, you got a problem. So as far as I'm concerned, the Fed should go to 25 points with the caveat that we don't get another banking issue happen. You know, another bank being named, who knows what it is. Second thing that I'd love to see. Don't you think it's time for the Fed to do a very quick stress test on these securities these banks are holding? I can't help but get away that if one's doing it, aren't others? The Fed's been raising rates right along now for basically a year. Agreed? And the banks aren't looking into what it's doing on the face value if these get called back and they're not doing hedging. I don't understand where the risk officer was at SVB or who should have been a risk officer or who was overseeing the shop, but something's not right. I can tell you, having hedge experience, that's what you do. You watch your portfolios, and that's what hedging is there for. Okay, I don't think it was done, but if they didn't do it, how many others didn't do it? And where are they if they have to go to this new discount window, whatever you want to call it, that the Fed has created? So I'm in favor of that. The other thing I told you, I expected that we'd see lines of people at banks pulling out, getting their cashier's check, chairs in front. We saw that. It's coming to an end. The smart money have gone and got the monies that they wanted to move. You don't have to move it all. It's protected for that year period that's there. But you should move what you have to just to be smart. And that way you can sleep at night and do what you got to do. One other thing. I keep forgetting to tell you, hey, if you like what I do here, and I know we get lots of you that watch me every night, can you give me a thumbs up? That would really help an awful lot. All right. The algorithms look at it at the different stations, and they like to see that. So as we look at the gold market, it's come up, and why not? It fell back, held key support on a weekly basis, looking good, up 2.23% for the week. The market is consolidating, I think, right now. It's gotten up on a step stool, if you will. It's got the pattern overall where it bottomed out here, moved up. Do we have a clear pattern of higher lows, higher highs? We don't. It's understood. When you think back to Friday and Monday, the market didn't have a chance to do that. It was a matter of investors just jumping in and wanting to own it. The same thing went on for whatever reason in Bitcoin. You wouldn't think it with some of these banks that the crypto world has taken down. But there it is. Very interesting to me. The market over key moving averages, and the line up here is pretty interesting. It's bullish. Why? What's the definition when moving averages line up that you'd call it bullish? You've got the shorter term, the 18 over the green, which is the 100, and the green over the 200. That's a classic bullish setup. It should be the shorter term over the medium term over the longer term. So as I see it, the market's in there, but I'm going to repeat over and over. Gold has a terrible way of getting you to the altar and disappointing you. And there's no reason for it to give up now, but it's on a stilt. It could easily do so. Beware. That's the right word. Why am I saying that? Well, what are the odds of staying over a Bollinger Band? 5% of the time. You're over the band, so I'm expecting the market to slip under it. You're trading at 1908.80 right now. The Bollinger's 1911.60, so you're already moving to the right-hand side. It doesn't have to drop a lot, but it has to move to the right-hand side because it won't stay more than 5% of the time above that number, and you're overbought. Do I think overbought attracts new money? No. Is the market even close to embedding where both the blue and the red are going over 80 for several days? Not even close. Overbought at the Bollinger Band, danger. Okay, I'm not bearish. It's a warning signal though. In the gold versus the May silver, and I've gone June gold now, May silver, you can see how the market finally got underneath this 18 average. And if it can stay there and get back under another day or two and then plow through that, maybe silver starts gaining on the gold. But right now, as I teach, after you've had a big run, you often go back to the 18-day average and you fight a battle there to decide what's the next trend is going to be. In the silver market, I see limited upside right here. I think you're going to run into the 100-day average if you keep going in the upper Bollinger Band and you're overbought as can be. Yes, the trend is up, but so many of these markets have done something, and let me give you a warning. I've seen these things before. They give you a spike because of a big action that happened on Friday and Monday. Where would you put a stop if you enter? If you're going to put a stop under the most recent low of 1994, and you're sitting here at 2181 and a half at a full-size contract, that's almost, what, $9,800 of risk? No. You know, I look at money risk as much as I look at a moving average, a slow stochastic. And if you take my full course, you get a feel for what that is. And that's what you should be doing. You should be taking a look at some of these courses we have there under education at iraepstein.com, and you'll get a feel for the Bollinger Bands, outside days. Remember, we had them last week, and I said, now you watch. You got what's called a continuation pattern. Here's what shouldn't be taken out, and if it's going to go, it goes now. And it's exactly what occurred in a bunch of the markets. By the way, let me come back here. It occurred right here. Outside day down into the Bollinger Band, took off, and you never looked back. So learn these patterns because they will give you another form of looking at a chart and an understanding, and that's what this is all about. Now, in the copper market, you also had 2 days ago that outside day, but I'm not looking for more than right here. It's already hit it. The same day that it had it, it went to the resistance point, the 18-day average of closes. Copper's dilemma is it needs the biggest buyer in the world to do something, and that is China, and the biggest consumer, and they're not doing anything right now. So the market's saying, okay, it's caught between the lower band, it's in a downtrend, but it's got resistance at the 18-day average, and that's what you're dealing with. You got a problem. In the platinum, nah, if you were sitting next to me, I'd give you the elbow just like that in the side and go, you got to come out of this market. This was yesterday. First challenge of a 100-day average in that. And you'll say, Ira, it's going to keep going, and that's fine. I'm not telling you to go short. I'm saying that the percentages are against you of this market on the first challenge of let alone the 100-day average after you haven't been there since back here over a month ago, and the Bollinger Band. You're counting on this event to do it. What if the event just gets quiet for a little bit? You got a problem. Next, we come to the palladium market, which I'd love to see just finish off and get up here. It's been a vertical price rise, obviously kicked with the banking event for the past 2 days, and now it's just sort of sitting still at this point, very overbought. And it's time to move to the June currencies. So we've moved away from the Marches. It's now that you got to be into the Junes, and the support you've already added right here. Could it go lower? Yes, but the dollar's got real problems here. It's acting more and more bearish, and that's just how the setup seems to be sitting in. So you put it together, you try to come up with ideas, and all I need you to do is go to the website. At the top up here, you'll see a clicker, an icon. Give it a click. It'll take you into the education area of our website and look at the different courses there. I'm Ira Epstein. You have a good day. I'll see you tomorrow.